Hi there everyone, good afternoon and welcome to this edition of Closing Trades. I'm Avan Dabash and with me is Ajay Sharma. And Ajay, we're bleeding blue today. I don't know how many people are even watching the screen right now because we have a screen on there with the cricket match.
This is the low volume edition of the market. This is the low TRP edition of anything beyond cricket on television. So yeah, you're right about it, but we got to do what we got to do because the market is on people's phones, so they can still be watching TV and still tracking markets. And look at the way almost at 19,700. So almost a 900 point rally from that Thursday of 18,800 lows. Market is rebound. And interestingly, not just the large caps, the bank nifty has come back. There is small cap, mid cap already leading from the front, and there is a complete change in narrative, in the global narrative in the last 48 hours. Now we have the chances of any rate hike in December have collapsed. In fact, chances of about 275 basis point rate cut in the US have come on the table by UBS note and some others as well, and that has led to a sharp rally. Globally, India is participating as well. There are other factors as well. The numbers are good. India's own CPI has fallen along with no big. In fact, Avan, are you aware? Just half an hour back, there is a third international brokerage has come out. Nomura is now saying India is looking good. Yesterday, Morgan Stanley and Goldman both. So people are kind of positioning into this pre-election rally which is happening, and we are looking good. But the big story is not markets today. It may be the second headline, but the big story has to be cricket, isn't it? Absolutely.
It's the first semi-final of the ICC World Cup. It's underway. The josh is absolutely high. Remember, we won the toss. India won the toss. We've chosen to bat. So let's find out. Let's get a little bit of a mood check. My colleagues Karishma, Shweta, Arunil from the Times Network, they're with the fans. They're getting in a bit of a mood check. Maybe we'll try and spot Anisha over there as well. Take it away, guys.
People are obviously very, very excited about it. They are hoping and praying for an Indian win. We are going to be talking to some fans as well. Sham sir, I'm going to call you a fan today and ask you what are you expecting from the match?
Like whatever I'm director or whatever it is, but my fan inside me is always there. It's always alive. And this is a tough match, very tough match. If we are going to win today, it's going to be tough, but we are going to win today.
Well, absolutely, we are going to win today. I'm going to try and speak to more people as well and ask them what they think about the match today. Do you think it's going to be an easy win for India? It's going to be tough.
It's a tough game, but I think India will sail through, given the form.
India will see through.
I think this is going to be a very difficult match for India, but I'm 100% sure India is going to come out victorious and we're going to go to finals.
Well, absolutely, and we can see the excitement here, wherein people are dancing, there are dolls over here. So this is the mood right now as far as the Indian team is concerned, and the excitement for the big semi-final is concerned. Everyone is hoping and praying that India wins against New Zealand.
There's love, light, and a lot of cheer for Team India. You can hear from them. And these people have been cheering Bharat, India, and they are looking forward for the match. And here, I'll come to you first. You're here with your entire team. First, let me ask you, how far do you believe that, while we speak, New Zealand is a tough competitor for us because 2019 is still haunting us somewhere?
Perfectly true, but India definitely 100% gonna win. Go India, go! All the best to Indian team. All the best to Virat Kohli. Looking forward for his 50th century. Go Kohli man, go India!
My only fear is that the law of average shouldn't catch up with India.
Right.
My only fear is that.
Strategy is on point. What do you say about the batting order? Even we have the magic of, you talk about Siraj, you talk about Sami, you talk about Jasprit Bumrah. In fact, Ravindra Jadeja as well being the spinner.
I think it's really good. As long as we restrict them to less than 300, if they bat first, we're going to win it. Yeah. And if we bat first, if we score 330, 340, we're obviously going to win it.
That's it.
Because we have a really good bowling attack.
So that's the cricket fever for you, but because Wankhede is very close to Bombay Stock Exchange, some of the market guys are also coming down, and that guy in the center who said law of averages will play out, I think has to be a stock market guy.
Your twin.
Oh, well, let's move forward and take the discussion on markets, where a very interesting inning of bull and bear is also panning out over there. Shibani Sircar is also joining in along with Nooresh. Shibani, Nooresh, Kunal. Let's take the discussion forward. Shibani, Is the bottom in place now? Has the narrative structurally changed as far as rates are concerned, and now the street will start moving into that first rate cut, which is likely to happen in the next 6 months or so? Is it very material development which we can't, just not an ordinary global cue, which we cannot just take in the stride?
Yeah, hi, good afternoon. And obviously, all our eyes are on the cricket match, and difficult to concentrate on markets in such an environment. But as you rightly pointed out, one of the key drivers for markets, both globally and in India, will be the trajectory of rates and what the Fed does. Our belief is that inflation in the US has been coming off, but clearly what the Fed is now signaling is that rate hikes may be off the table, but the timing of the rate cut cycle is still fairly uncertain. So we will have to wait and watch from that perspective. For India, however, I think what's clearly playing out is more a structural growth story where, on a relative basis, India's macro growth is standing out. And the fact is that even in the current earnings season, corporate earnings has been holding up fairly well. And in fact, this earnings season has been widespread in terms of earnings delivery across sectors. Now, in this sort of an environment, the only factor that we really need to keep an eye on for India, in my opinion, is valuation. Uh, from a large cap perspective, valuations seem to be at reasonable levels in line with long term averages. Mid cap valuations are slightly above long term averages, but small cap valuations continue to be significantly above long term averages. In this sort of an environment, some degree of volatility cannot be ruled out, even though structurally we believe that the all the ingredients are in place for Indian equities. So our overall view has been that slightly we overweight on large caps where the margin of safety is in your favor, and slightly underweight on small caps in the near term, especially given the kind of volatility that we are seeing. But also from a sectoral perspective, our belief is that domestic facing sectors continue to be far more resilient and growth opportunities remain intact.
All right, domestic linked sectors, that is what Shibani is looking at. But I wanted to also get in a take from you as to what the sense is when it comes to the entire frontline banking space. Is it that you're expecting some of the stocks that have been lagging off late now to play catch up, the frontliners?
Yeah, so that's been a one space where, if you look at what's been happening for the last maybe 12 to 18-month period, the space has been significantly lagging. But however, now when you look at the key parameters of the sector, loan growth has been panning out much better than expected. Loan growth remains fairly robust and widespread. In terms of the liability profile, a lot of the banks are now seeing improvement in terms of deposit growth, especially so some of the large private banks where deposit growth has now been ahead of the industry, and therefore that market share shift that you're seeing on the balance sheet side continues. Asset quality trends, while there have been debates on unsecured loans, has been holding up, in my opinion, fairly well. And valuations are clearly in your favor. At this point in time, for some of the frontline large cap banks, apart from the issue on the ownership side, if you look at fundamentals as well as valuations, we believe that these banks are fairly attractively placed.
It's very important to mark a big NBFC right now. In such a market, it is collapsing in trade, and that is Bajaj Finance. Look at Bajaj Finance from the high of almost 74.66 today. The stock has fallen. It's trying to recover, but it has taken a knock. And certain sections of the market are, there's a chatter on the street. Shibani, when such large sized NBFCs, do they become very, does their size also start posing an issue, or the regulatory environment is so strong and, the management quality, everything, checks and balances are already in place, the size doesn't really matter?
So I'm of the camp that, size doesn't matter simply because the opportunity for credit in India is huge. While we keep saying that India is underpenetrated, it is a fact when you look at numbers that the growth runway for credit in India across segments remains very large. And therefore, while we keep having this debate about size and balance sheet and therefore the inability to grow, I think the growth runway remains. So if you look at NBFCs overall from a sector perspective, NBFCs growth has been actually ahead of the banking sector. In particular segments, NBFCs continue to deliver on growth. The issue for them over the last year has been margins, and with interest rate cycle trending up and wholesale rates moving up, NBFCs have seen pressure on margins. As we were discussing earlier, it is possible that the rate hike cycle is now coming to an end. And from that perspective, NBFCs should benefit given that they are wholesale borrowers. And on the lending side, many of the NBFCs, which are fixed rate lenders, will possibly start seeing some sort of margin bottoming out, and then over a period of time, margin should start to inch up. Within the NBFC space, the best way to look at stocks would be three key factors. One, of course, as we were saying, the growth runway. Second is in terms of their presence in a segment where there is lesser competition or there is a niche that the NBFC enjoys. And the third would be parentage, which gives them access to capital. So from this perspective, if you look at NBFCs, overall valuations do seem attractive.
Taking a look at some of the interesting movers over the last month or so, and names like BSC have risen about 55%. Suzlon, of course, has been a buzz. Today is no exception in the kind of rally that we've witnessed of late. 50% is what you've seen on that stock. Angel One is another stock that has gained traction, 42% in the last 1 month or so. Kunal, let's get in a take. I don't know if you track any of these, but what are the charts indicating?
Yeah, so the last two ones, Angel One as well as Suzlon, I think both of them are attractive. Angel One, I think, in fact, many of the broking firms, the stocks, Motilal, yes, even that stock has moved up higher. MK, I think, is up some 9% or 10% today at 109, 110, the last I had seen, for the stock. So I think many of these stocks are doing exceptionally well. So it doesn't come as a surprise that, Angel One is also looking very attractive on the chart. So I would probably be of the belief that the stock looks attractive and the sector itself looks to be on a very strong uptrending mode. Suzlon has been one of the showstoppers so far from the mid cap, small cap spaces. The stock has done exceptionally well so far. Even at 39, 40 plus levels where it's trading right now, it doesn't look like the momentum is abating for the stock price. So I think that also looks as an attractive bet.
All right, tell you what, we'll take a very short break right here on the show. Come right back, lots more market talk.
Okay, so India has lost its first wicket. Rohit Sharma at 47. 70 is close to what the run rate is going on right now. Let's see. But as Kunal, who's also lives very nearby to Wankhede, is telling that Wankhede is actually a bowler's pitch, right?
Yeah.
It's a small ground and it's the bowlers who actually do the magic. So just tracking the, how many runs are we making actually may not be the right point.
Yeah, it may not be the right point. But I think, batting first always has an advantage because the pitch, I'm not a cricket expert as such, but I think the pitch plays dual. So in the first half, I think the pitch is a bit, the ball comes to the wicket. In the second half, I think it gets a bit slow.
Okay, it's where the action is not getting slow is the market. And one capital goods stock which is gaining smartly in trade is Siemens. Shibani, have you tracked this is not a chat about the stock, but the company. There have been some corporate announcement around it. The business cycle has favored them. There's no question about it. We can always talk about, questionable valuation, but the business cycle has been very well. There was some recent announcements which certain sections of the market did not like, some transaction, but now a detailed commentary coming in about a corporate restructuring which may be underway at the parent level, but may impact Indian business. Have you looked at it?
Compliance prevents me from talking about a specific stock per se. But, we've been vocal about one key theme that we have been playing across our portfolios, which has been the entire manufacturing and industrial space. What we believe is that what started out as growth, largely driven by public capex, is now showing signs of spreading out into private sector capex and picking up. We've also started seeing utilization levels pick up at a headline basis as per the data that RBI puts out on a quarterly basis. And therefore, our belief is that the entire capex cycle still has a fairly long headroom for growth. The second factor is if you look at the quarterly earnings season, most of the companies that have reported numbers have shown that order inflows continue to be very robust. And therefore, the momentum in terms of ordering, especially for the engineering capital goods infra space, is something that will possibly also drive growth. And again, incrementally, we are also seeing new areas and tailwinds for the entire growth story to play out. While again, the debate has been going on in terms of where valuations are, we believe that in pockets, the opportunity set still remains fairly intact. One has to be, of course, mindful of valuations, especially if valuations look extremely rich. But the infra manufacturing capital goods, the overall opportunity set remains large, and we continue to be fairly positive. And this is a theme that we believe will play out from a structural perspective over the medium term.
That's the view coming in just from a long-term perspective on the fundamentals. But let's discuss the charts then. And Kunal, take us through how Siemens has been trending and what are the charts indicating by way of target price?
Siemens, I think specifically has been a stock which had done exceptionally well. I think in the end of 2022, start of 2023, the stock I think at one point was almost at 4,000 rupees. Then I remember I think there was a point when there was some news flow which had impacted the stock price. There was a sharp fall, one single day for the stock when it fell some 200 odd points from those 4,000 odd levels. And then from there on, it's just gone through a drag. So I think from the August highs of 4,000, the stock had corrected towards 3,200, which is a good 20% correction for Siemens. Now, at current prices, the stock is trying to make a comeback above the 200-day moving average, so which means it's trying to end its corrective wave of 20%. But I believe that eventually these stocks, they take a lot of time to try and make a comeback for themselves. So my sense is that 3,200 could actually be a better price or a better entry point for Siemens. I think buying the stock at those levels would probably attract more attractive as well as better risk reward.
Sure. Let's analyze that particular announcement which has come today, which excited the stock momentarily. We got a sector call from Shibani. We got a chart call. Now let's understand the announcements. And Lisa is here. Lisa, tell us what does it really mean?
Right, so it's actually a revision in price what was mentioned. So Siemens India will be acquiring 18% stake in Siemens India Limited for a purchase price of around 2.1 billion euros. And Siemens as well as Siemens Energy both will jointly propose to the board of Siemens India Limited to separate the energy business by way of the demerger. Now it all began when Siemens Gamesa, who is a subsidiary, which is a subsidiary of Siemens Energy, they identified quality issues way back in 2023. Way back in June in their offshore turbine business, and so most of the issues that revolved around the quality problems at Siemens Gamesa. So Siemens Energy said that there is a separate set of challenges in the offshore turbine part of Siemens Gamesa business, and the resultant impact is that the company disclosed a 15 billion euros financial shortfall that, if unresolved, that could lead to the collapse of the project pipeline. So Siemens Energy AG has acquired a 15 billion euro deal with the German government, and its biggest shareholder, that is Siemens AG, as well as consortium of the banks as the troubled manufacturers, weather massive losses at its wind turbine. So what is the analyst saying, especially Phillip Capital? They said that there are two scenarios to this. One is the first scenario where a potential demerger of Siemens Energy that would eliminate the anticipated cyclical upcycle play in transmission as well as the distribution segment, and the second scenario where the demerger won't happen and Siemens AG will plan to acquire an 18% stake in Siemens India from Siemens Energy for 2.1 billion euros. That comes to around 19,000 crore rupees in INR terms. So yes, considering the current market capitalization, 18% stake, that would result in 22,400 crore rupees. So right now they have a neutral rating on Siemens India Limited at a target price of 3,400. So that's the word coming in from Phillip Capital.
That was the detail about the transaction which has happened. But Nooresh, I wanted to scratch that point which Shibani was making, that rate cut cycle, if it starts by mid next year, actually it's the NBFCs as a lender which will actually benefit because they are the wholesale borrowers. Growth was never an issue for them. It was the cost of capital. If it comes down, it will be added, Philip. I want to analyze with you the entire range of mid to small NBFCs, Indiabull Housing Finance, LIC Housing, PNB, Ugrow. If you can tell us which are the charts, some of the charts which are looking good to you for this trade, for the mid cap, small cap NBFC trade.
Yeah, so in the sector, the first thing which looks very promising has been LIC Housing Finance, because it's been a sideways stock. The stock is still available at the prices where it was pre-COVID. So the stock used to be 450, 500 pre-COVID. It had gone to 450, 500, 500 odd levels in start of 2021. And since then, the stock is available at the same prices. After making a breakout move, it is still around that 450 to 460 area. So this could be a stock which could go, which could break out going forward, go towards 550, 600 levels. So LIC Housing is first. PNB Housing, if you look at it, the stock has started outperforming of late. It made a new 52-week high today, has made a slow and steady recovery from March end. So housing finance companies could be the first in radar. Then we look at NBFCs. We've seen all small finance banks continue to do well. For example, a Ujjivan or a Equitas and even the smaller names in the NBFC pack, something like a Saturn has broken out, Spandana Spurti. So we started seeing the markets have already started playing this whole sector one by one. We are seeing a lot of smaller names hit new 52-week highs, whether it is the Shriram Finance or L&T Finance holding. So the sector is in a strong trend. One should be looking out for names which have consolidated well. So out of these names, as of now, the best risk reward is in LIC Housing Finance with a medium-term outlook, and would be looking out for other names also going forward. But the trend is very clear across the space.
The entire metal sector as well is looking good today. A buzz, Hindalco, Tata Steel, JSW Steel, Nalco, etc. All of those stocks are quite active in trade right now. Shibani, any thoughts here?
Yeah, so metals has been one sector where we've been somewhat underweight across our portfolios. This sector, as it is prone to very high cyclicality. There has also been significant amount of excess capacity that has been built up in the sector. And from a demand perspective, we are seeing that demand revival is taking time, especially where China is concerned. And globally also demand remains fairly muted. Now, there is again a lot of debate as to whether China will step up the ante and there will be a push in terms of getting growth back on track. So far, that has been elusive. The other big factor for metals has been that a lot of the metals demand comes from real estate in China, where again there is significant amount of oversupply. And therefore, we believe that at this point in time, given that demand remains fairly muted, the cyclicality is something that will play out in the sector. What we have been looking at when we are, investing in stocks across the space are companies where there has been some amount of balance sheet deleveraging, where there has been improvement in terms of capital allocation, as well as the fact that some companies which benefit from the fact that domestic demand overall has remained fairly strong. But by and large, we have been underweight on the sector, and that continues.
Okay, fair enough. That's the view coming in. Meantime, Ajay, a sector that you used to track closely, the entire oil and gas, OMC space, and it's interesting as well in terms of, the kind of earnings that the sector delivered. All in all, it was pretty healthy for the entire OMC space, upstream companies as well. And Shibani, actually, I wanted to get in your take. Given the kind of volatility as well that we're seeing in crude oil prices, etc., what's the outlook on how this sector could perform? What have you made of the kind of earnings, even from some of the heavyweights within the oil and gas space?
So again, this is a sector which is, as you were rightly mentioning, prone to significant amount of cyclicality. We've seen how oil prices have been volatile, and that volatility continues. But at the crux of it all, again, it goes back to the demand situation. Globally, with growth slowing down and growth remaining fairly muted, demand is likely to trend lower, and therefore demand remains muted. Why oil prices have been volatile has been primarily because of the supply side pressures that come in, and therefore it's more supply led rather than demand led. So again, from that perspective, this is a sector where we have been by and large underweight. Within the space, depending upon some pockets of opportunity, we have exposure, especially where the gas utility plays are concerned, where structurally you do see demand holding up. But the threat in terms of the EV space also comes in where the sector goes. So by and large, we have been underweight across the entire oil space. But at points in time, given valuations and valuation support, you may start to look at some of the segments. But our belief is that given global growth remaining muted, oil prices are likely to remain fairly benign, while we may see near term some degree of volatility because of supply side pressure.
Shivani, I also want, since we spoke about energy, there's also a massive energy transition which is happening, and there is a play across the world. Somebody was telling me the other day that there are, the demand in Europe and in US for transformers and transmission towers have risen very sharply, and there are not, adequate supplies. And if we were to talk to companies like Skipper, even some of the other KEIs of the world, KEC International, who are into transmission towers, some transformer companies, they also mirror the sentiment that increased inquiries from overseas. Plus, of course, there's a domestic factor there. In the power transmission full value chain, where are you most comfortable on valuation? Is it the power lenders? Is it renewable, legacy, metal and mining which feed into power? Where exactly would you be more comfortable in?
question and a sector which is fairly interesting. So, as you rightly pointed out, there was a lot of debate that again was happening within the sector, especially where climate change, ESG risks, and these risks are fairly real. However, what has happened is again possibly an outcome of the pandemic and the way the global, geopolitical situation has played out. It is, very clear that while the energy transition that we are seeing is likely to continue, especially for a country like India, we will possibly see a period of time where thermal capacity additions will go hand in hand, where green energy capacity additions are also concerned. So it's something that will coexist for a particular period of time. Most of the power companies that we have seen in India are in capex mode. There is likely to see incremental capacities coming in both on the green side as well as on the thermal side, and therefore there is that entire momentum that is playing out. So, from our view, at this point in time, if we look at the entire power space, we prefer the Gencos over the distribution companies. Some of the power lenders where growth was an issue are now seeing loan growth coming back, and there you have also support from valuation perspective as well as from a dividend yield perspective. So some of the names there look interesting, but the overall power space in terms of incremental capacity addition is likely to see strong momentum, and therefore this is a sector where across our portfolios we have been fairly positive.
All right, that's the view on the entire space as a whole. Meantime, a quick check-in then as to what the markets are up to. 19,651 is where the index is at, and the broader markets showing you smart resilience. A lot of the rate sensitives are performing. Names like Eicher Motors, Tech Mahindra, Hindalco, as well as Tata Motors, Infi, they're all a buzz, not to mention Reliance Industries at about 2353. A quick chart check. Nooresh, on Eicher Motors, top nifty gainer.
So Eicher has given a breakout move today. It was making new swing highs for the last three sessions, but today is a strong move on a daily basis in terms of the size of the move. And we are back to the previous 52-week highs and all-time high zone of 3,800 to 3,900. So if it crosses that, that would be a fresh all-time high. Overall, the whole auto pack has been doing well. Eicher was consolidating for quite some time and now looks promising. Just that after today's move, the risk reward is not great. So would wait for a fade off tomorrow to actually look out for a buy on dips. So still a hold at current levels looks promising.
And the other big beneficiary of rates peaking out is the high growth IT space. Shibani, the mid-tier IT companies, which indeed are high growth, because large caps are perceived high growth, but they have very anemic growth actually. If last 4 quarters are to be taken, but let's talk about Emphasis, KPIT, Persistent. That variety, I would say, they've shown high growth. Many of them have raised their growth guidance. So, do you think this pocket is also likely to see valuation boost coming up if rates peak out? Because the discounting and the entire manner of valuation will get, will actually change if the rates indeed come down meaningfully in the next 12 to 14 months.
Yeah, so the entire IT sector per se has been struggling primarily because of the fact that again globally there has been so much of uncertainty. You are right that within the sector, those mid caps and the smaller size players have actually exhibited far higher growth, even in this kind of earnings or this kind of uncertain environment from a demand perspective. So, if there is a situation where there is some clarity that emerges both in terms of growth as well as in terms of interest rate cycle, the sector will benefit. However, near term, the sector is still likely to see fairly muted trends where revenue is concerned. Going into Q3 is typically a seasonally weak quarter. This is also a quarter where there are significant amount of furloughs. And when we're speaking to a number of companies, the company seems to suggest that their clients are still not seeing visibility in terms of growth for them to up the spending, especially where discretionary IT is concerned. So therefore, we will possibly still have to go through muted a couple of quarters, maybe Q3 and Q4. And then, as you said, if the macro starts to stabilize both on terms of growth as well as interest rates, then we might see IT spending come back to a more normalized run rate in terms of revenue. Now, in terms of the mid caps, clearly the valuation differential between mid caps and large caps, like we were discussing in case of banks, is visible in case of IT as well as a sector, where mid cap valuations are far in excess of what large caps are trading at. And this is a reflection of the growth differential. Mid caps have become far more nimble and agile. They have built capabilities and skill sets in many of the new segments where growth is fairly strong and resilient. And they're in fact even competing with some of the larger players in large clients as well. However, valuation wise, mid caps are trading at multiples which are significantly higher than even their own average multiples, and therefore one has to be slightly selective where some of the mid cap IT names go.
Time to get in some closing trade ideas from our chartists. Nooresh, what are you tracking?
So continue to like Federal Bank, which has taken a little bit of a dip today. At 150, the risk reward looks promising. A fresh 52-week high and all-time high done in the last couple of sessions. So from here, would expect a move towards 165 to 170 in the short term.
Kunal, let's get in your closing trade.
That'll be Reliance Industries. I think today's breakout is a strong indication that the major downtrend for the stock is now behind us, that the stock is also trading above the 50-day moving average. That's a stock which I'll look to trade in the closing segment.
All right, Reliance Industries, Federal Bank, those were the closing trades. Shibani, good to have you on board. Thanks so much for taking time out and joining in. All right, we'll take a very quick break right here on the show. Stay with us, lots more lined up when we return.